The vast majority of people's interactions with blockchains are via centralized exchanges trading coins, right? And I mean, the research is there, right? When you have to wait 10 seconds for something to happen, you lose your attention. If you have to wait even a second or two for something to happen, your intentions are interrupted.
Nothing said on dYdX Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of dYdX Research. Today I'm joined by Lei and Namik from MegaEth. Thanks for coming on, guys.
Hey, thanks for having us.
Before we get started, it might be helpful for you guys to give a background on what MegaEth is.
Yeah, so I can give a quick intro. So MegaEth is what we call a real-time blockchain. A real-time blockchain is a blockchain that is super fast in terms of both throughput and latency. We're targeting a throughput of 100K transactions per second or 10 gigagas per second, and a latency of less than 10 milliseconds or a block time of less than 10 milliseconds. Yeah, so MegaEth is built as a Ethereum layer 2, and because that allows us to do something which we call node specialization. So we hyper-centralize the block producer, and at any given point in time, there's only one set of nodes producing blocks, which ensures ultra minimum latency and ultra minimum block time. And on the other hand, we support full nodes and replica nodes, which permissionlessly join the network to synchronize with sequencer to get the latest blockchain state. And finally, we settle back on Ethereum, the layer 1, with proofs, first initially optimistic and later ZK, to ensure the correctness of the states.
I was just going to say we're excited about MegaEth because we believe it enables a new design space for applications. By making the design choices we have, we enable applications which are real time, leveraging our unique optimizations to build applications which haven't existed before.
Perfect. So you guys answered my next two questions, but I guess let's talk about this term real-time blockchain. It's the first time that you guys are the first team that is using it. Can you expand a bit on what exactly it is?
Yeah. So, I mean, the notion of real-timeness of a computer system is not. It's not there in the blockchain. It's not invented in the blockchain space, but rather it's mostly to kind of describe an operating system or a piece of software that just responds to user interactions with so much responsiveness and gives the user kind of a feeling that they are talking and they're using something that is like alive, right? So a comparison would be, I will draw like two examples. One is what you call batch processing. So that's basically the way how computers work back in the days, like before 1970s. Back then, computers are mostly used as a tool to help researchers, and what researchers do is to just prepare a whole lot of jobs for the computer to process, and the computer take it as a batch and probably do the work overnight, and next morning the researcher will get up and get the computational results. And but however, nowadays the way we use at least Web2 applications, our daily computers, is that you click your mouse or you type something on the keyboard and you expect immediate response on the screen, and that's basically what real time really means in terms of UX. And basically our goal is to make the Web3, the world computer, as responsive as as our daily computers.
Yeah, that makes sense. Namik, I remember watching a video on Twitter, and it was you mentioned it, that like how when I click on something on my regular computer, I expect it to go through immediately, or else I get really upset. And then on the blockchain, we don't really care that much as of date. But that's what you guys are trying to fix, that it's as responsive as a daily computer.
Yeah, I think in a lot of ways, blockchains are not truly usable, which is why we have very few developers in this space and we have very few real users in this space. The vast majority of people's interactions with blockchains are via centralized exchanges trading coins, right? And I mean, the research is there, right? When you have to wait 10 seconds for something to happen, you lose your attention, right? If you have to wait even a second or two for something to happen, your intentions are interrupted, right? With MegaEth, the plan is to say, hey, let us leverage the security of Ethereum to maximize for performance and bring a new wave of experiences on chain. And that's kind of the North Star of MegaEth in a lot of ways.
That makes sense. Lei, you kind of brought this up, node specialization. And then Namik, you mentioned that you guys made some design choices. This is kind of, I guess, the most controversial topic about MegaEth is that you have some trade-offs. What would you say those are, and how are you combating potential malicious behavior or potential, I guess, downsides?
Yep. So the most important design decision that we took was to centralize the sequencer or centralize the block producer. Um, yeah, and by extension, we're calling it no specialization because we not only do this kind of, purposeful design for the sequencer, but we also do that for say for the full nodes, for the replica nodes, and for the prover nodes. So this design decision really, I think it roots back in a blog post written by Vitalik, which basically kind of describes an idea that all performant blockchain would eventually require centralized block production. And the trade-off here, or the benefit it provides to us, is that because there's only one computer that needs to pump out blocks, there's no like cross-internet communication that needs to happen to produce the very next block after one has been produced. So imagine, like, I think a comparison is a traditional layer one, let's say Ethereum, the mainnet, and you don't really know where the next block, where the next block is going to be produced and who's going to be the block builder or who's going to be the proposer of the next block. And the moment after you have produced your block, you have to send the block to the person, and the person has to apply the block on their local state so that they can produce their block on top of it. And this process of communicating and replicating the states takes time. There's a lower bound on that, which is the speed of light, right? So by kind of co-locating by co-locating the machines that produce the blocks, you can minimize the latency. And and basically what you do is to push this architecture to the extreme, which is to just, cram them into just one single machine and then let the single machine produce blocks. And the resulting low interblock time, or block time, and the resulting high throughput is the major benefit. And the trade-off, on the other hand, is yes, we are a centralized block producer, but what we're doing to combat this is by rotate the sequencer. So instead of requiring a cohort of nodes to be always online and always participate in a consensus algorithm in a critical path to produce every single block, what we do is that we set up a lot of like candidate block producers, and we rotate this role of the active block producer among these candidates. So we achieve both liveness, because if one sequencer is down, we can just rotate it out, and we retain all the benefits of this centralized block production.
That makes sense. And I think this is kind of what a lot of chains are trying to do is we've realized that consensus is the bottleneck. Um, and we're just either co-locating or single centralized sequencer. Um, one thing I wanted to ask is, so in general with L2s, the North Star has been to decentralize the sequencer. We see this with, I guess, slower L2s. But this is obviously something that you guys aren't interested in. Do you think you can get the performance that you guys want, or let's say like 10,000 TPS, which is lower than you guys, with a decentralized sequencer?
I would first say that I don't think it's true that we are not interested in decentralizing the sequencer. And ultimately, we see decentralization as a means to an end, right? What users care about are like guaranteed correctness of execution, our censorship tolerance, very strong censorship tolerance, to be honest. And but decentralization in the form of like injecting a consensus protocol into the critical path of block production is just one way to do it. And this sequencer rotation, which I just mentioned, is, I would say, another way to also decentralize the sequencer, but not in the traditional definition of it. But in terms of, so I guess your question was, can we achieve the same performance if we have a consensus protocol in the critical path, I mean, the consensus protocol would be participated by at least tens, if not hundreds of nodes, then my answer would be very hard, because if you want, it's kind of the same argument that I make, right? Because if you want computers across the world, across the internet, to reach consensus on what is the previous block, it takes at least several round trips across the world, and that's almost 500, 600 milliseconds. And there's no chance that you can do a block time that is lower than that if you still require this consensus to happen before you produce the next block. It's just a lot of physics. So, but I mean, throughput are probably a different story, but still very hard.
Yeah, just to kind of highlight there, I think for us, fundamentally, we believe like settlement, DA, and execution are all different layers that need to be optimized in different ways. And we are building the execution layer. So, yes, are there nuances that one can take? Sure. One can mid curve this architecture to say, hey, you know what, we can actually still reach a very strong level of, performance and be, with some consensus in the sequencer architecture, but it doesn't serve our purposes to the greatest extent, right? So in that regard, we are quite opinionated, and while we will have a rotational sequencer architecture, we're not particularly interested in building less performant our infrastructure.
That makes sense. And the full nodes, as far as I understand, are used there to verify that the last good state is good, right?
The full node. So okay, so the full node will re-execute the transactions, yes, and they're gonna verify that the state they hold is correct. We also have replica nodes who do not verify transactions, but merely serve as like horizontally scalable, like read replicas. Yeah, and also prover nodes, which not only verifies the transactions themselves, but also proves to the world that, hey, the state snapshot is correct.
Fantastic. I guess one more question about your architecture is you talk about memory computation and how you translate smart contracts into machine code on the fly. Can you explain those to me, like, um, I don't know, that I've never done this before, just so I understand?
Yeah, of course. So these are actually two separate optimizations. In-memory computation is a kind of a trend that happened in the data center world about 10 to 15 years ago. So the whole story is, the whole story is that, most applications require accessing and actually very frequently reading or writing to some state, to some storage, some database, right? And the inherent limitation here is that if you store your data on a kind of a persistent medium, which like is, for example, your SSD, your hard drive, the latency or the time you have to wait, your software have to wait before the data is fetched or the data is written is actually much longer than if you store those kind of data in the main memory of your computer, the RAM. So the idea is basically that now that RAM is cheap enough, last time I checked, it's about $1 per gigabyte in the DDR4 server memory. So now that the RAM is cheap enough, you can actually afford to store all your hot data in the main memory to benefit from all the latency improvements, actually multiple orders of magnitude of improvement, by storing in the main memory. So it's actually kind of a simple idea, right? You just put all your data in the main memory. But the execution is actually what I think is pretty interesting here, because as I mentioned, if you store it in a persistent medium, you suffer from high latency. But if you store it in the main memory, yes, you benefit from low latency. But the memory, I mean, all the data in the memory is lost the moment you unplug or someone unplugs your sequencer. So ensuring the data persistency, even if you are storing the data in the main memory, while running the sequencer, is a major technical challenge. And actually, our other tech co-founder, Elon, he and his lab studied in-memory computation very extensively during his years of his PhD at Stanford. So yeah, it's a very interesting problem, but we have also a very interesting solution. Um, On the other hand, I think you also mentioned the translation from EVM bytecodes from smart contracts to machine code. So the story here is a kind of a technique called compilation, which is again a kind of a technique from the greater computing world, not just specific to blockchain. And the idea is that, yeah, people can only write scalably write programs in human readable programs. So usually people write their programs in say C, C++, Go, Rust, whatever, and there's a tool called a compiler that translates these kind of human readable strings, human readable languages to the language that your computer understands, because your computer, on the other hand, is only good at like doing very mechanical stuff, like reading and parsing programs that adheres to very strict and simple syntaxes. So doing this conversion is the job of the compiler. And in EVM too, there is a compiler. I mean, there's a translator, because the EVM programs are written in what we call EVM bytecodes. But your computer does not really understand, at least your hardware does not really understand the EVM bytecode. So you have to translate it from the bytecodes to what we call the machine code, which your computer understands. And in traditional EVM execution models, there are two, major performance sufferings in this translation. First is that EVM, the VM architecture, is a much, much simpler architecture than your modern Intel, ARM, AMD CPUs. So basically, if you kind of emulate an EVM on your modern hardware, you are kind of not using much of the hardware acceleration, hardware capabilities of your CPU hardware. And this is lost in the translation. And second, this translation itself takes a lot of time in the critical path, because literally when you execute a smart contract, when you execute a transaction, you are literally grabbing the contract from the database, do the translation live before you can even run the contract on your hardware. So what we're doing is basically, first, we're doing this translation ahead of time. We're moving it out of the critical path so that it does not really cut into the time of your block building. And second, because we do the translation ahead of time, we can afford to do much more sophisticated stuff to maximally preserve the hardware capabilities of your modern CPU, so that the performance loss of emulating a very simplified EVM VM is minimized.
Fantastic. I want to ask a question about in-memory computation, and then I think we should move on to application layer. But in terms of in-memory computation, so you said that if a computer turns off and the RAM is lost, what happens if, let's say, the sequencer turns off? The nodes surrounding the sequencer when is the last like good state saved? Is it per block, or is it a longer? Do you get what I'm trying to say?
Yeah, I see your point. Yeah, it is per block. And I
Okay.
think it's a very interesting question, because if the data is in the memory and if it turns off, then naturally one would think that the most recent data would be lost, and we have to roll back to some like recent like snapshots. So this is actually where this in-memory computation is super non-trivial to achieve, because um, when you produce a block, it's kind of a contract with the other nodes surrounding you, right? It's like, I will never roll back the block. So you have to make sure that the data, once it leaves the machine, is never lost, even in the most bad disaster, which is like a total power loss. And yeah, we can guarantee that. We can guarantee that the data is never lost once a signed block has left the sequencer.
Fantastic. Okay. Let's actually do L2 competition, because I want to hear you guys' thought. Do you think that the current state of L2s is good enough? And do you think that they can compete with monolithic chains, which we've seen kind of dominate this cycle in terms of mindshare?
Yeah, I think there's a couple reasons why existing L2s have not been able to be competitive with monolithic chains like Solana. We can touch on those afterwards, but I want to answer the first question, which is, do we think that the current layer 2s are good enough? And I mean, obviously, we don't think that's the case, right? That's why we're building MegaEth. For us, there are fundamentally different design choices one can make by being a layer 2, understanding the role of execution, and hyper focusing on execution. We don't think that those have been adequately optimized slash maximized, right? I think there's a lot of great high perf players that are coming to market, and those will be good, I'm sure. I don't necessarily have any insight into their timelines and what they're doing, but we do believe that we will see the next wave of truly high performant block space exist only as a heterogeneous architecture, right? No blockchain that has consensus will be able to be as performant as a blockchain that has no consensus, right? I may have fumbled my words there, but TLDR, consensus slower, no consensus faster, MegaEth, no consensus. And we just think that's like a basic law of physics.
Fantastic. I guess we've seen other L2s try and scale horizontally. I think Arbitrum and Optimism, they've both gone with L3s and other L2s.
Yeah.
I would say Base is scaling vertically, and there's clearly demand to scale vertically, and you guys are clearly scaling vertically. Is there any chance that you're gonna do also some form of L3s, or do you just not care? I assume you just
Sure.
don't care, but just want to ask it.
So I think here we can actually answer the question about like why these monolithic chains have been so much more successful than let's say like L2s as a basic blanket statement. And I think it's exactly because we have been a bit intellectually lazy when it comes to vertical scaling. And we've said let's just have a cajillion L2s, right? And let's create unbelievable levels of fragmentation and breaking the composability of crypto, right? Like, why are people in crypto? There's generally two sets of individuals. One, it will be someone from an emerging market that understands the power of not being effectively locked into a social system, socio-economic system, right? So myself, I'm Azerbaijani, Cypriot, Lei is Chinese, right? Like we come from like the global south, right? But there's a very, very large portion of the population that sees the immense value in atomic composability, right? It's an environment everyone can come and play in. And that is, for many people, the true PMF of crypto. And that is something that existing L2 architectures completely break, right? Because when you have a stack or you have some horizontal product, what you end up doing is you end up saying, hey, you know what, to move liquidity between these different chains in the most trustless manner has crazy withdrawal periods, right? And then you have like a literal domino effect risk. So I think that's one of the main reasons why we haven't seen success of, let's say, layer twos compared to layer ones. Though I think one exception could be something like a Hyperliquid, which is an app chain. And that is because they have a very particular use case, right? Like perp dexes. And that
Yeah.
can be, doesn't need to have insane composability of the rest of the ecosystem. So yeah, I think like for us, stacks are cool. Horizontal scaling is like interesting and all as well, but like we are vertical scaling first, right? Like MegaEth with our design choices will be able to handle more computation than any other L1 and L2 combined. It would make absolutely zero sense for us to focus on building a stack as opposed to creating a really very, very rich ecosystem of applications.
That makes sense. I have one more question. The EVM, why did you guys choose to? I mean, obviously you want to build an L2, but why the EVM? This is like something that people have started asking over the past 4 months, and I want
Yeah,
to get you guys on it.
I'll give like the left curve take, and then Lei can give the right curve take. We're quite complementary in that regard. I mean, I think a lot of this alt VM stuff is very overrated, right? Uh, the EVM has the richest good public goods that have been contributed and poured into it, and the EVM has not been optimized into its final state, right?
Yeah.
So why would we kill the network effects? Why would we kill the moat for anything other than just like a nice narrative, right? Like the reason, to my understanding, that people love Solana is not necessarily because of the SVM. It's because of all of its other properties. The SVM is actually has a lot of constraints. So the whole thesis here is like let's focus on effectively working what we have and bringing it to its ultimate conclusion and just continually optimizing. But Lei will give a better answer.
Yeah, I think it's along the same line of thoughts. So EVM has been there for, I mean, the longest amount of time in, I mean, ensuring complete smart contract programs, platforms. And the amount of tools and expertise accumulated in the developer community is too big to ignore, really. Like the static analysis tool, the fuzzers, all the security tools, all the libraries, so that you don't have to really risk writing incorrect smart contracts, right? These are all there, and it would be too destructive if we even dare to kind of abandon this rich asset. And also, I just took my lesson from browser wars, right? I personally I hate JavaScript, but somehow JavaScript lived until today and is thriving. And all those big companies, what they do is not really invent a new like browser programming language every 5 years, but instead they accumulate 20 plus years of work into like optimizing the engine behind JavaScript, which is the only web programming platform nowadays. So yeah, I just took my lesson here. Even if you like, you can make different trade-offs, make design decisions if you are given the flexibility of spawning an entirely new execution environment. Usually it's better to just go with the mainstream and just like pull the work from all the minds here to just kind of co-optimize the same execution environment.
What they said, which is really, really important, is like the trade-off between the new VMs supposed guarantees, right? Be that like security guarantees, and the lack of third-party tooling and libraries to also solve that same problem, right? I think security is a great example. How do you build the most secure application? Well, I think a really big selling point for like Move is that it's like very secure, right? But it won't have that same rich third-party contributions to be able to build a really brilliant application day one that the EVM would have. But that's it.
What's up, guys? Welcome back to 0x Research. Today, I'm joined by Antonio from dYdX. Thanks for coming on, Antonio.
Hey, thanks so much for having me.
I guess it's been kind of a big past few months for you since you rejoined dYdX as CEO. How has that experience been?
It's been great. Yeah, I mean, I feel like I and the company are more revitalized now. We went through some pretty big structural changes for the company. We're operating much more as a startup, shipping pretty fast. We released dYdX Unlimited a couple months ago, and development continues full steam after that. So yeah, it's been really good.
Fantastic. And with you joining, have you shifted the vision of dYdX a little bit?
I'd say some, but the vision of dYdX has always been pretty long-term and pretty broad. And even when I was away from the CEO role, I was still obviously really involved in the company overall and still executing towards that vision. And yeah, it hasn't changed too much overall. We really just want to build powerful products that give everyone the opportunity for financial upside.
And has the priorities for the team shifted a little bit as DeFi has evolved?
It has some. So we've been full steam ahead on dYdX Unlimited, and then that shipped about a month or two ago. Now the biggest things that we're working on are really just structural improvements to the product overall, making it a lot more performant, a lot more reliable, and making sure that dYdX is the best decentralized exchange to trade derivatives on.
Perfect. Could you run over dYdX Unlimited for a little bit?
Yeah, so dYdX Unlimited was one of the biggest product updates that we've ever made to dYdX. And the biggest headline features of that are instant market listings and then the Mega Vault. And these two are really synergistic. The Mega Vault is a protocol-wide vault that allows automatic liquidity provision, and it makes being a market maker really simple. So you just go one click, deposit into the Mega Vault, and then those funds are used to start providing liquidity automatically on basically all markets on dYdX. Fast forward to today, there's already $70 million locked up in the Mega Vault last I checked. And it's just a really great, simple, easy to use product where users can get yield. It's also great for the protocol because it provides a lot more liquidity, and it especially provides liquidity in long tail markets. That's where we've seen automated market makers be really successful. And it pairs very well with the second feature I mentioned of instant market listings. This is really cool because with instant market listings, anyone can come and list basically any market that they want to trade on dYdX. So listing is not up to me, not up to governance. It's just really simple. Again, you can go to dYdX, just click once, and the market is live immediately. These two things work together because whenever you list a market instantly on dYdX, it requires a deposit into the Mega Vault for that market. So there's immediate liquidity on that market and you can start trading right away. This really is important towards our vision of allowing users to trade basically anything on dYdX. And that's really what we're building towards.
All right, let's talk a bit about MegaMafia. So there's a lot of performance chains out there, and I feel like the big thing now is getting as many apps on your chain as possible and making people want to actually use your chain. Do you guys want to run over what MegaMafia is, and then maybe we can dive a bit deeper into how it works out?
Sure, I'll talk about the inspiration for the MegaMafia. I think as everyone who's listening has come to the same conclusion, we've made some extreme design choices, right? We've looked at these trade-offs and we said, let's take them to their logical conclusion. And the promise behind these decisions is like crazy performance. Well, if we didn't have any applications which were leveraging this crazy performance, well, what on earth are we doing here, right? So a year ago, we kind of came to this conclusion. We came to this another conclusion, which is like, okay, the venture market is a bit weird, right? I come from venture background as well, where people aren't willing to take a risk on individuals, right? Unless they have some sort of pedigree and are already established. And that's where we saw our edge come in. We have this new blockchain, it's contrarian. We have a new design, and this design could conceptually bear new applications. Let's do our best to find the smartest people we know, make bets, right? Asymmetric bets on people the market does not price well, right? And you'll see that of a lot of the MegaMafia. They aren't your pedigreed, 10 years at Google or like have been at top crypto companies. They're young, scrappy, hungry people that have great ideas and are willing to basically give it their all to build applications which didn't exist before. So we found them, we put them in a room together, and we just basically cooked. So the first iteration of that was in Berlin. We basically flew 14 teams to Berlin. We all co-lived together for a month, work hard, play a lot less hard. And effectively, like what came out of that was 10 great applications, right? Top tier teams have been able to raise a lot of venture financing from top funds and building applications which are only possible on MegaEth, right? And that could be DeFi applications which leverage 10 millisecond block times, unbelievably high throughput, co-location, meaning real-time price oracles and price feeds, right? But it could also mean non-DeFi applications, right? Like things that bring amazing emotional value by having such abundant amount of space that you can now put things on chain that you couldn't have put on before because data is useless, right? Examples of that could be games, a fully on-chain Minecraft. It can be a dating application which leverages your knowledge graph to give you recommendations on who you should go meet. It can be game shows, right? Like trivia games. We've been able to incubate / accelerate now north of like 17, 18 teams, which are all building really unique applications. And they're all young, hungry founders, which are like the next generation, we think, of Ethereum.
Fantastic. When you say incubate and accelerate, how much support are you guys offering these teams?
Sure. So it's really interesting because I think that the MegaMafia was more so a function of a pre-mainnet MegaEth, which will not be the future forever. It's not for long, honestly. And it was done with the idea being like, okay, I'm actually putting my entire weight behind you, right? A lot of these ideas, for context, MegaEth takes no equity in any of these teams, right? For us our win condition is if this project becomes $1 billion business on MegaEth, because of our design choices, MegaEth is validated. So firstly, we take nothing. How hands-on are we? Unbelievably, right? Lei is a really busy guy. He has weeklies of all of the engineering teams. I'm not nearly as busy as Lei. I also have weeklies of all of the teams, right? We ideate from product to economics to the go-to-market strategy to the user behaviors to the tokenomics to the fundraising. All of it we do hand in hand.
Fantastic. Last question is, you mentioned a few of these, Namik, but what are some apps that are uniquely enabled by MegaEth's performance and architecture?
One example can be, so let's start with DeFi, right? I think that the holy grail of DeFi has always been like the central limit order book. It's a bit boring in some ways because everyone talks about it all the time. We have multiple teams working on club architectures, um, both lending as well as like traditional like spot and perp architectures, right? So that's pretty interesting. The lending side, we haven't seen a lot of people explore lending for clubs. It's something that's being done. We have some really interesting trading architectures, right? So another one of the teams which is being built, part of the MegaMafia, is effectively saying, hey, there are all kinds of really interesting trading strategies which are now possible with 1 to 10 millisecond block times. And proportionally, there's really cool arb opportunities between that blockchain, between centralized exchanges, and between other blockchains. What if we were able to take all of these trades, all of this yield, and give it back to users? So there's some really interesting things going on in the form of stable coins there. On the non-directly DeFi design space, I think games are really cool, right? Everyone loves the idea of games, but the issue is there are none in crypto. None of them are successful, and I think it's a function of like usability, right? If I move my character on my laptop, right, and it takes 12 seconds for that to be represented, like that's an horrible UX, right?
Yeah.
On MegaEth, that's no longer a problem, and we think that's going to be an unbelievable unlock. I think like you saw a note announcement of a MegaMafia just a week ago that is building effectively autonomous world engines on MegaEth, right? And it's the whole idea there will be like you can do all of this crazy stuff with pure crypto composability and have seamless UI UX. We have some other really cool stuff coming up as well around live streaming, really fun games, a couple interesting Ponzi's which are intellectually stimulating. We have a wide range, and to anyone who's listening, right, like the best way to stay in touch with the MegaMafia is really just 0x MegaMafia. We will more or less retire the program after mainnet because we don't want to be working so closely with some particular teams. But we're really, really excited of the caliber of founders who've been able to inspire to join us.
Fantastic. Yeah, guys, make sure to check out MegaMafia somehow, like on 0x MegaMafia and on I guess it used to be on your website. I assume it's still on your website.
We have a new website coming very soon. By the time this pod is live, you should check out our website, megaeth.com or megaeth.systems, both route to the same domain. It looks pretty sick.
Very good. One big thing that you guys did over the past few months is, I guess over the past month, is the Echo raise. What was the process like? Are you happy you guys did it? And I guess why did you guys decide to do it?
Sure. I think we are, I don't know if we want to say like old school, but like definitely quite sentimental for the days where like crypto walked the talk, right? And like, what do I kind of mean there? When I got into crypto, I had a little bit of money, and I had equal opportunity and equal access to projects that I had belief in and I had conviction in, and I was able to like do okay for myself, right? And kind of have a step in crypto and start growing and like meeting people, and like I was able to pay for my first ever for like real IRL event, right? Because I had made a little bit of money in crypto and I was able to go there. I mean, now if you aren't like an angel investor in this previous bear market with like the primo, like really good deal flow, you didn't make money, right? Because what ends up happening is a lot of these guys end up looking at users as exit liquidity, right? That's not really how we see things, right? I think on our end, we didn't need to raise more money, right? We were able to raise a decent amount of money to build our ambitions. What we really needed to do was make sure that we can get everyone to have equal terms, right? So we're very excited to have been able to use Echo to effectively bring in 3,200 investors to participate in MegaEth at the exact same terms as Vitalik and Joe and Dragonfly and Kobe and all of these other guys. And for us, it wasn't really a question of like, oh, well, we're diluting our company, right? There is literally no point of doing this if it is not to enable like an entire new generation of builders and founders and users to kind of accelerate and come onto crypto.
Very good. I think it's a very valiant effort and goal, and I don't know. I thought it was very cool when I saw it. I guess to wrap it up a bit, what are some mistakes that you guys have made with MegaEth since the launch, and what is something that you definitely would have done differently?
Well, I don't think we have made too many mistakes on the technical side. Yeah, well, all the all the initial optimizations that we envisioned in our very first white paper, in memory computation, um, parallelization with provable that is probably free of cascading boards, um, compilation, a new peer-to-peer network design. Yeah, they all work well, actually. So it turned out that every single one of the optimization that we conceived worked well.
I think we're a really scrappy team, right? On the non-technical side, at least. And we sometimes were just too quick, right? Like, I think we really took the idea of, like, move fast, break things, and could be a bit confusing, right? At some points, you were saying 10 millisecond block times. Other places, we say 1 millisecond block times. I mean, in actuality, we can go to sub millisecond block times. That's the actual goal. But not having consistency around language. I think we also shipped our website a bit too fast. I think a lot of people were like, yo, you raised all of this money. Why do you have an AI mascot? Which is a totally valid point. I think that's a very valid criticism. I will say it wasn't fully an AI mascot. We had a little bit of design as well, but I think we were just really excited to hit the ground, not only running but basically sprinting, and that kind of not necessarily backfired, but kind of made things a bit more chaotic. I think also sometimes we can be a bit overly opinionated on Twitter, right? So we can get into unnecessary fights, or just like we can be a bit bantery. We think it's fun, but understandably it can end a bit agitated. So I would say those are the two. I mean, we've gotten a lot better about our mistakes. I think we're really excited about effectively building this ecosystem out. I think we've been able to do that so far so well. I think the tech is coming quite soon, so that's going to be really exciting for MegaEth to kind of face its next evolution.
All right, fantastic. Last question: who is your biggest competitor in your mind, and how do you see the L2 landscape shape up over the next year?
Sure, I can go first. I only see Solana really, for a couple of reasons, right? I think Solana represents I think we have a similar goal. So one of the reasons why I think they're our largest competitor is because we have similar goals to enable like this global state machine, right? We have very different approaches towards it, right? Solana is monolithic in its most simplest core, while we are a heterogeneous network by nature, right? And obviously, we think that our architecture makes the limits much higher and is much more scalable. But I think that when I see our competition for talent, for builders, for eyeballs, I think that's all Solana. I think Solana has the same value propositions as us, and it has the same North Stars as us in terms of like what's the kind of experience they want for their users. In terms of how I see the layer 2 landscape emerge, I think there was a pretty good argument / conversation around this, I think, between Jesse and Anatoly on Twitter, right? Do we see a million L2s or do we see a few? I personally lean more towards a few, at least in the short term, right? In the next few years, I don't really see more than a couple L2s existing as a function of like, these are countries, these are civilizations, these are users, these are like ecosystems. And if you can build vertically, right, your population can get so much larger, and then you have massive network effects of that. And yeah, I mean, I think that's my main opinion. Let's see in a world where all of these things get like sent to their absolute limits, and then we'll see more L2s emerge. And I think we also need to see a lot more success at the atomic interoperability for these kinds of other architectures to really be valid. Lei, what do you think?
Yeah, I think Yeah, in my mind, our biggest enemy is actually a kind of an ossifying view of what a blockchain is and what a layer two, how a layer two should be built, right? Say embedding, because a trend that I see among many layer twos is that they are kind of becoming more and more similar. Actually, I think you mentioned that many layer twos are trying to decentralize by reintroducing consensus. And I think that's kind of a walk back of I mean the layer two idea, which is to kind of be an architecture that's starkly different from a layer one architecture. So I think a kind of an ossifying view of how layer two should be like is actually a major enemy to us, because yeah, and but also I think an opportunity for us, because basically the goal for us is to show that, hey, there is a different way to build a blockchain and it will be equally secure, equally useful, but much more performant. Yeah, so I think that's probably one of the enemies. And yeah, I would agree with Namik that yeah, I would view Solana as a team that has a very similar mindset in terms of the trade-off between performance and the other aspects of a blockchain, right? And while I would say that we go slightly more extreme than them, still, but yeah.
Yeah, I really appreciate how product focused Solana is, and it's like a core principle in absolutely everything they do. Solana Breakpoint compared to like I don't know, like an ETH conference, they're fundamentally very different, right? And you see that in the way they look at productizing the roadmap.
Perfect. Is there anything that my fellow listeners should look forward to that you guys want to bring up? I guess like maybe over the next few months. When is mainnet? When is testnet? When are we launching the product? Is my question.
So I guess like what we can say is this, right? We are really, really, really happy with the private testnet, right? We're talking about multiple gigas in terms of performance of single credit performance. We are moving very, very rapidly towards making that into a public testnet. From a public testnet to a mainnet, let's hope this public testnet works, right? Knock on wood, mashallah. Outside of the technical roadmap, I think we are really, really just excited about getting as many people that are value add into MegaEth community as possible, right? We are really excited to kind of bring more people into the fold, and we look forward to having hopefully some of the listeners here join the MegaEth community as well.
All right, fantastic. Guys, thanks for coming on. This was a lot of fun.
Likewise.
Thanks for having us.